the meeting that we just had, the Shanghai Cooperation Organization meeting, where Russia was there, India was there, China was there, amongst other companies. Just the Shanghai Cooperation Organization alone, and I mention that a lot when we talk about the BRICS because they're very well connected. They represent 41% of global population, 34% of GDP globally, 25% of the land area of the whole world. So these countries are becoming very formidable. They've become very wealthy. Their middle class has expanded. They're not third world countries anymore like China and India were not too many years ago. They have become formidable, to say the least, and they're securing deals. Not only are they securing deals in things like energy for a very long time, but they're not going to be paid in US dollars. And that's part of this whole new system that we see emanating from China. The gross mismanagement of our fiscal house, our silly monetary policy, our sanctions, and our ruling the world with a stick, putting 50% tariffs on India, silly as that may seem, to the folks in India, Trump seems to think it's a good idea, and you can see it's just pushing Modi right into the hands of China and into Russia. Trump claims that we're the largest trading partner for India. Maybe that's true, but when you look at their global GDP numbers, it only represents about 3% of their GDP. Buying cheap oil from Russia is far more beneficial to India than it is trading with the U.S. As hard as that is for a lot of people to believe it's the truth. And I think that this is beginning to have ramifications. The world is pushing back. The world is pushing back against the United States, and that comes in the form of lack of treasury demand. And this is just beginning as far as I'm concerned. You're going to see a whole lot more of this, especially as it's becoming very, very obvious that we will lower rates once again. So we don't have our monetary or our fiscal house in order. We're going around the world and imposing sanctions and or tariffs even on our friends and allies like India. And then we are now going back to the inflation well by lowering rates now into, mind you, a very soft economy where the unemployment numbers continue to be revalued or readjusted rather downward. This is a very, very, I think, fragile time, and I would expect to see more pushback around the world. Why would anyone want to continue to hold our U.S. treasuries when our U.S. treasuries are, in essence, paying under the rate of inflation? And you look at this year as an example. The 10-year Treasury, which pays 4.5% or even a little bit less, is up about just over 2.5%, 7-8 months into the year, but the dollar's down 11%. And this is a trend that we would expect to continue. You look at Trump's agenda, or Stephen Miran, who has taken over for the vacated spot out of the Fed. He's the author of the Mar-a-Lago Accord. Both of them are really pushing for a weak dollar and low interest rates. This is the whole idea of trying to synthetically find demand for the U.S. Treasury. But it's as if they continue to believe that everything is the same as it was years and years ago, maybe even decades ago, where the United States was revered, where countries wanted to hold our treasuries, where countries wanted to hold our dollars. And quite frankly, we are witnessing the opposite of that. In fact, it's the lowest amount of central bank holdings of U.S. dollars in a very, very, very long time. It's continuing to fall off. So central banks don't want to hold our dollars. They certainly don't want to hold our treasuries. It's a sucker's game right now. And now you're going to have the Fed come in and cut interest rates. Might help the markets in a very, very short a very, very short time frame, but ultimately it's very bad for the dollar. It's very bad for most people, as I believe inflation will be reignited. And I think going into the end of the year, not only will you see greater inflation, you're going to see higher interest rates as the rest of the world pushes back against holding our bonds. And quite frankly,
Well,
I would too if I were them.
Well, but there's also a propaganda war against the United States being funded. I don't know exactly who's funding it, but it's a coordinated effort. When you, like, I have people in Ireland and the UK and Europe, they're like, Sarah, you would not believe the media and the negative, the way they put the United States in a negative light. You know, what's going on in Israel is not cool. And we are being pinned, all that stuff that's happening in Israel's being pinned on us worldwide. And the propaganda against us is, whether it's true or not, is incredibly damaging.
Well, that's what propaganda is. I mean, I don't know what it is around the world, but in the United States, every magazine, radio station, newspaper, and television station, they're all owned by three or four companies.
Yeah.
And so the information that is, coordinated, you look at the difference between the media, the left media, and anything that's a little bit more right-leaning like Fox, and it's night and day. The way that they portray stories, they create a perception of reality. And this is why I say all the time that I know a lot of very, very smart, well-read people. They just read the wrong stuff. And in reading the wrong stuff, you have a picture of reality that is very, very slanted. It's far easier, I think, these days to create that type of propaganda, to create that
It
illusion with the
is.
coordination of all of the media. And, like, for example, just the fact that so many people think we have a strong economy, yet 451,000 jobs were revised out of just May and June alone. And our CPI has stayed above 2% for 53 straight months. So when you talk about how bad it is here, yet the left-leaning media will tell you everything is great, instead of exposing the Bureau of Labor Statistics for revaluing 61,000
They were
jobs
all,
three
that was
months later.
incompetence, right? I mean, that's, you can't be that bad
Well,
at
and
your job.
that's right. Well, look at the way the markets reacted when those numbers came out. Stocks went way up, precious metals came way down. Policy is made on these types of numbers, and then quietly 3 months later they revise it. Now the rumor is that between 5 and 800,000 jobs will be revalued for July and August, and which will give impetus to lowering rates as much as 50 basis points. Last time that this happened, a few years back, gold took off, and I would expect that to happen again.
Well, that's what Goldman
Simply
Sachs
be
is saying, right? 5,000 they
Yes,
just came out with.
yes, and in particular, what Goldman Sachs is really saying or hedging is that you have to have separation between church and state, meaning you have to have separation between the White House and the Federal Reserve. And if the Federal Reserve will bend a knee at the whims of the president, then you don't have that check and balance, and that the markets will lose faith in the dollar and in the Treasury as they already are. It's just adding fuel to the fire.
But do you think,
And
hold on, I got to push back a little bit about the Fed being independent from the president. I can understand independence. However, I don't understand a Fed being owned by wealthy elites around the world and central banks. That's not okay.
most people don't know that, though. Most people don't know that the Fed is neither federal nor a reserve. And most people think the Federal Reserve job is to come in and rescue the markets, as they have for years and years and years. And now I just read an article talking about many of the banks around Europe are getting very concerned. In fact, they're trying to pool dollar reserves because there's somewhere in the neighborhood of, oh gosh, I think the number is like, I'm going to butcher this number because I just read it this morning too. Let's just pretend it's somewhere in the neighborhood of $75 trillion. And I think it's less than that. Let's say $35 trillion. I don't know why I can't remember the number. 35 trillion in global European non-United States debt in US dollars. And there's only about 7 trillion in US dollar reserves amongst all of these European central banks. And they're very concerned that the Fed won't step in and provide relief or provide swap lines, provide the liquidity that will be needed if things go awry, like we did before when we passed out money all around the globe to these countries who needed dollars when things started to collapse. This is the whole crux of the dollar milkshake theory, is that there's so much demand in it for dollars because of all the indebtedness in dollars. When you lend money, you're creating future demand for the dollar. Because when you lend money in dollars around the globe, even a European bank can create a dollar-based loan. And when that happens, you create future demand for the dollar because not only do you need to repay the loan back in dollars, but you need to repay back extra in terms of the interest. And so all of this debt that's denominated in dollars at a period of time when there's not enough dollar liquidity out there, and not enough dollar demand, it's starting to, you can see how this can very quickly spiral into a big problem. And if the Fed doesn't step in and help, these are the kind of things where, very quickly you can see things spiral out of control across the globe if that doesn't happen again. But you're right. The Fed is owned by a bunch of very wealthy bankers around the world in a very shadowy.
Who don't really give a crap about the United States.
No, they don't. They don't at all. In fact, there's probably a good portion of them that would be very happy to see the United States be knocked off its pedestal, as far as I'm concerned. And a lot of people that I respect, in particular, a guy named Tom Luongo, says that this is kind of what Trump is trying to do, in that he's pushing back against the aristocrats, the old European bankers, the aristocrats who
against them.
Who he believes, yes,
when
he
when you're
that,
pushing back against the Fed, you're pushing back against these families. Keep going.
and he believes it was those families that created the color revolution in this country with the wokeness and the immigrations and the open borders.
To take us down.
Take us down, along with the money that they are responsible, including the election interference. He believes, Tom Luongo is a very smart dude. I've had him on my show, and he believes this very much so, that the European central banks were behind this. Trump believes it, and he's pushing back. A lot of people think that's why we've seen them, in essence, drain the LBMA, the London Bullion Metals Association, through all of these deliveries into COMEX that were listed or explained away as, well, it's just to take advantage of arbitrage or the tariffs, and everything will flow back there over time. I don't believe that's the case at all. In fact, I'm arguing that they brought all this back specifically for a reason, to reshore it. And the LBMA has the lowest amount of silver that they've had as a float in the history of the exchange. And at the same time, they've been 8-week delivery delays instead of 2 days, which they're supposed to be T+1. So on the T plus 1 day to settle, on the third day, your metal should be moving. They've been as delayed as 8 weeks because they don't have it. Even the head of the Japanese commodity exchange said that in London and in Switzerland, they're trading 3 million ounces of platinum a day. That's a deliverable spot contract, but there's none there. So all of the deliveries out of London, a lot of people think Trump understood that this was the Achilles heel to the Bank of England. And that's why they've been draining it to fight back against the European aristocrats, and in particular the Bank of England. I guess we'll see.